Hi everyone, my name's James. Welcome to this video. It's Sunday night, Sunday afternoon my time. Markets will be open in a few hours. I want to go through a couple of things that we looked at last week. And this is just a brief update really. I'm holding a live stream tomorrow on Monday, so look out for that. I will put a link up in this channel. Let's have a quick look at currencies. You can see the dollar moved up a fraction on Friday, almost nothing, almost moving nowhere at all after a big down day on Thursday. And approaching this recent swing low and the lower Bollinger Band, and I expect we'll eventually break down through there. That's at about 97 or 98, and I think we'll get down to 93. That'll push the euro and the pound and the other majors up. My target for the euro is 1.1850 and then 1.2, maybe 1.21. You can see the two positions that we have on already. I'm also short on the euro yen. This is moving down slowly, and I'm expecting this to reach somewhere down towards the bottom of the recent range and then a breakdown below there, breaking down below this bear flag down towards 144. The length of this red arrow is equivalent to the length of the previous red arrow which started off this bear flag. The only other position we have on currencies right now is along the Aussie dollar, and you can see where we are right now. As I keep on saying, we may have to stretch out quite a long way further to the right to make this more symmetrical, and this is forming an inverse head and shoulders pattern. Not my favorite pattern, head and shoulders or inverse head and shoulders, and they're often predicted, easy to see in advance, and often they don't work out. My general idea is dollar weakness, and that should push up the Aussie dollar as well. Going across the stocks, we have positions on the Nasdaq and the S&P and one or two names. Let's have a quick look. We have a one up, one down candle pattern on the Nasdaq up against this resistance. That's a reversal daily candle pattern. When we broke up above this flat top swing high, I hedged this position and I remain hedged. So our hedge positions are almost on top of each other, very close to each other. You may as well say we're not in the game here. However, we do have a long and a short, and I'm able to adjust those as we go along. This reversal pattern here, one up, one down, is a pretty clear reversal candle pattern. It doesn't mean that it's going to work out. As long as we hold below this swing high at about 21,780, call it 21,800, we should be okay. If we close above there, that pattern is invalidated. Same sort of thing on the S&P, although we're still short on this one. We haven't hedged just yet. We haven't closed above that swing high, the red arrow where I got in on the short, and we also have a one up, one down candle, but notice we're above all the moving averages. The 50, the 200, the 20, and the 100, we're above all of them, and the same on the Nasdaq. So even though we've approached the recent all-time highs again on both the Nasdaq and the S&P, we're still technically in a bear market, having moved down over 20% on both of them. Until we make a new all-time high on the Nasdaq or the S&P and close at those levels, we're still in a bear market. A lot of people disagree with me on that one, and I could be completely wrong, and that's okay. I'm often wrong, but so far I'm remaining bearish. Same on the German 30. We had a big bearish day on Thursday, and then on Friday we tried to move up a little bit and fell back right down. We've got two short positions, one from over there and one from right at the top of the channel where I said we'd sell if we reached it. We did reach it, so we sold. Now we have been variously short and long on MSTR, Tesla, Coinbase, Nvidia, Target, all those sorts of names, but now we're long on MSTR and long on Nvidia. Those have pulled back to the support levels and the breakout zones, and I think we could get a lot higher on that, moving back up to this recent high at about 153, 154, and then higher up just above there is the top 200 period Bollinger Band at 159. I think we could break 160 and head up quite a lot higher on Nvidia. We're also long on MSTR, basically a Bitcoin play. If you remember, we were short from these two blobs at the top here. We took profit and reversed to long. We've fallen back to the Fibonacci support level, the 50 and the 100 period moving averages just below there, and we're now long. So those are kind of offsetting the short positions that we have on the Nasdaq and the S&P. And a sort of a hedge in a way, I suppose, but we'll see how we go. Obviously, we're going to have to get in the same direction on all of these at some point. Now, going across to cryptos and metals, Bitcoin has moved down to the support level that I thought we might reach, just down to that breakout, that flat top at around 103. In fact, we got down to just 103, exactly 103, and maybe a couple of pennies as well. We should try and find support where we are right now, but if that fails, the next level is at 100, the big round, and also this previous support flat bottom port over here. Bear in mind, we do have a CME gap at about 96,000, just about where this green arrow is, so watch out for that. That might have to be tested. But as long as we hold above here, and I think more importantly, the big round 100, and we don't close below 100, we should be okay for the next leg up. And I'm expecting Bitcoin to get to about 125, and then about 165. Those are the Fibonacci extensions, well published by most people. So that means that probably won't get there, and we'll probably get somewhere else instead. When specific target levels like 125 or 165 are so well telegraphed, the market probably won't get there. So keep that in mind too. Now going across to gold, you'll know that I've been short, but we've now hedged our gold position right at that level there. You can see our two short positions, and we've now equally hedged with a long position. The long position here is equal in size to the two short positions added up, combined, and we're now completely hedged on gold, and I'm also long on silver. I don't know which way these are going to go, but overall I still continue to think that gold has a very, very good chance of reaching 3,000, just above or just below, or potentially down to 2,700 or 2,800 in this blob down here. So we'll see how we go. I just hedge it in caution, really, just going into the weekend, and also with a lot of talk about central banks buying up more gold again last week. So just being a little cautious on there. And of course, we got the silver long hedge to offset what was the short gold trade, but we no longer have the short gold trade, so we're actually net long on metals. Considering we're also long on copper, and you can see our position there. After a big move up, a surge through that level and all the moving averages, we just collapsed back down again, but only back to the moving average confluence, the 20 and the 100. Notice that we've got the 200 period moving average down below us as well, equivalent to that swing low, so we may have to even retest that one more time. Whether copper will actually continue to rally or not, I really don't know, and a lot depends on the economy and demand for copper, particularly in some of the new industries that are springing up, and also in the demand for electricity and the transport of electricity by using copper. So we're still long on Ethereum. That's looking really good after that big surge, holding up quite well in a bull flag. Bitcoin, as I said, if we can hold this level, we should be okay for 125 to 165. We're also long on XRP, and that's just dipped back down into that order block and bouncing up again over the weekend. And that's all on that page. So very quickly on this page, I'm still long on uranium, on the uranium twins, URA and UEC. UEC came off a wee bit, back just down to the 20 and the 100 period moving averages, whereas URA is holding up really well. We did take half of our profit on URA into this order block, as you can see from our orange arrow. We got in long down here at about $22 and we got out at about $34. We're just pulling back now, and any dips down towards this sort of level, probably around 29, maybe 30, maybe just below 30, we'll try and add that 50% back on. Natural gas, very quickly. I'm going to try and do another video first thing tomorrow, a natural gas video specific for natural gas. But for now, I'll just give you my positions, and we'll also quickly have a look at the COT report. I have two short positions from the red arrows that we took inside this order block, and we hedged those short positions, locking in a 20% profit when we move down to this level and try to hold here. The last day or two was pretty messy. We had some big spikes down and then bounces back up again all around these moving averages and bouncing off the 200. So looking quite positive, actually, quite firm, despite the fact that we've moved down quite strongly late in the day on Friday. The question is, can we hold the 200 here and bounce back up again, or are we going to move down lower? The market opens in a few hours' time, and we'll probably get a weekend gap like we normally do. The size of the gap, I don't know, but we may just gap down into some of these order blocks, maybe 10 or 20 cents down here, or we could just gap up above this trend line and start moving higher. Notice how we're now hedged, sandwiched in between the red and the green order blocks. So for now, I'm completely hedged. We have two short positions completely hedged down at this level here, locking in 20 cents profit, and I'll adjust that hedge as the market starts moving. My general idea is that we should be trading between $3 and $4 for the foreseeable future, and considering that we're trading right now slap bang in the middle of that at $3.45, we're diddling in the middle, and there are no good probabilities either direction. I want to get closer to $3 to be buying more vigorously, or closer to $4 to be selling more vigorously. And for now, I'm just holding on to this fully hedged position with a 20-cent profit locked in. I said we'd have a look at the COT report for natural gas, and here it is. Notice that we're pretty close to the seasonal average for the 5 prior July contracts. And then let's have a look at the position adjustments going on here. Some large positions on the commercials, long and short. Notice how we slightly weighted to the long side and we took more off the short side, so leaning to the long side on the commercials. Producers, long 207 and short 216, just taking some off the short side, adding a wee bit to the long side, so pretty much balanced as well. And the managed money, 135 long, 198 short, so leaning to the short side and adding more to the short side, taking some off the long side. So managed money angling short. Non-commercials, 324 short, only 195 long, and adding more to the short side, so looking more to the short side as well. You could consider those to be pretty much in the same boat as the managed money. The swap dealers are angling long, 164 versus 39, but bear in mind they often go in the opposite direction to what the market might be doing, and therefore they're thinking perhaps that this market's going short. And then other reportables, people like you and me, the retail traders, 60 long, 126 short, and adding more to the short side, so also angling short. So back to the charts, and let's switch to the day chart for a longer term view on this, and you can see looking slightly negative actually on the day chart, and the weekly chart is showing a dark cloud cover candle pattern, as you can see, compared to that. Let's have a look at the weekly chart here on the NYMEX, and you can see it looks a bit different because of the rollover timing a little bit earlier on my broker. Bit of a weekly spike high here at the NYMEX and closing beneath the 20 period moving average, and back to the day chart on the NYMEX, and that also looks pretty negative. So overall, it looks like natural gas could be heading down, and we may see a weekend rollover gap to the downside today. We'll have to wait and see how that goes. So I'm quite happy with my hedge position right now, and of course I can adjust that immediately as soon as the market opens in a few hours' time, and start to adjust in the way the market might be moving. So that's it, folks. All eyes on the stock markets and Bitcoin this coming week. It's going to be super interesting. If you enjoyed the video, please like and subscribe, and consider joining the channel. There's a button below that says join, and it's $1 a month. So if you join the channel, you get all the members perks, all the extra videos, and you become part of a fantastic community. Hope to see you there. See you soon. Bye.
50-day moving, that's my bread. 200 trailing, don't be misled. Bands tighten up, volatility reduced. Break out, my profits produced.